Hey everybody, it's Dale Lookabaugh, your real estate expert, and I wanted to go over the market stats with you guys for Midland. So let's hop right into it. All right, our first chart is houses available. So basically, houses on the market, and this is Midland County through the multiple listing service. Let me move our chart a little bit here. All right, there we go. All right, so that red little dot right there. 511, that's how many houses we had on the market January 1st. Right now, I'm recording this on January 30th, 2023, and we have 474 houses on the market. So we have seen supply drop a little bit. And well, the next chart will show us demand, but we've seen demand jump up a little bit. But just to put 2022 in perspective, we started out really hot in that first quarter of 2022. Interest rates were still around that 3%, and then March came, and rates started raising, and demand started to fall off, and we saw supply continue to grow, and that's what happened. Demand fell, supply rose, but we still had a pretty good year in 2022 for the real estate market here in Midland. So we'll see if this trend continues, if the market still stays hot, or if we're going to cool down, because the Fed going to continue to raise their rates, and we'll just see what happens. So we're all in it together. All right, under contracts. This is just how we measure demand, by how many houses are under contract at any given time. So January 10th, we had about 206 houses under contract. There's that red dot down there. And right now, we have 268 houses under contract. So our market, we started out real fast. Come January 2nd, we saw listings that have been on the market for months, ended up getting multiple offers, and we've just seen a real pickup in demand so far. So let's go back to 2022. According to this, we peaked in March. In March is when interest rates started going up, and typically we peak in May or June or July. And last year we peaked really early, just due to rising interest rates. When your interest rate goes from 3 to 7 in the span of 6 to 8 months, that's really going to send a shockwave through the market, and that's what it did. It slowed down the market, and the Fed's doing exactly what they wanted to do by slowing down the economy. And at least in the real estate market, they have done a good job of that. So, but we ended the year at 223 houses on the market, and but we're up to almost 290 houses under contract. So we'll see if it continues. Interest rates did fall also. I think that spurred on a little bit more activity. Interest rates are about 6.25-ish right now, and that spurred on some activity. So far so good to the start of the year for real estate. All right, price reductions. This is a new chart for us. We were just tracking with the slowing market how many price reductions were happening, and right there towards the end of the year, 300 price reductions in 1 month. So that is just an indication that the market was slowing down. Now you see there 212 price reductions. So this is just the market changing again. Will the market keep going in the upward trajectory? We'll see. This is another new chart for us. We're just trying to track what price ranges were most affected by interest rates, and most of them were, except once you get up to 700,000 and upwards, not too much change. But everyone is interest rate sensitive. We were running numbers, and from 3% up to 7%, buyers lost purchasing power of about $100,000. So if your price range was 300,000, it just got moved to 200,000. But rates have gone down a little bit, and we'll see what happens. Interest rates, here we go. You go from 3 to 7.25. That's going to slow down a bunch of people. And they've come down, just like I said before. So we'll see what's ahead of us. If you can tell me where oil prices are going to be and where interest rates are going to be in 6 months, I'll tell you where the real estate market's going to be. How's that for a deal? All right. Average sales price for 2022, we were at $367,000 as an average sales price, and that's up from almost $355,000 from last year. Here's the appreciation rates that we've seen. 2020, nearly a flat market. 2021, 3%. 2022, another 3%. So this has been one of the most stable markets we've seen in a long time. You just look at it historically. I mean, when your market grows 7%, you're in an extreme seller's market. 2015, slow market, oil prices $100 to $30 a barrel. That slowed us down quite a bit. And then we recovered again. And then 2020 didn't lose much value. And so we will see what 2023 has in store for us. And then average days on market. We're just trying to measure the time a house is on the market. So this measures when a house goes on the market. So when it goes under contract. For 2022, we averaged about 45 days, which is less than 2020 and 2021. I don't know how this necessarily happens when your market starts to slow down, but your average days on market goes down, which tells me maybe that we figured out pricing pretty quick, and the market was still pretty good despite demand slowing down, supply increasing. Still not a great market, not a bad market, just right there in the middle. So, all right, that wraps it about up. If we can help you in any way, if you want to know how much your house is worth or what you could sell it for, please call me now. My number is 432-553-0766. Our office number is 432-682-1144. If you need a plumber, if you need an electrician, if you need a cleaning service, if you need a yard guy, we are here to help any way we can. We'll pass on our guys to you so that you'll be well taken care of. All right. Thank you all so much, and have a great day. Thank you.